and on my Discord, they'll be like, "Oh man, I got short that with you, but I got out, a week ago, and the thing's 20% lower, right?"
Mm-hmm.
And they don't get that I have to sit on it and make that 20% more because of all the losing trades I have to make up.
Yes. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Are you ready to effortlessly take the guesswork out of trading in only 10 minutes a day? Well, the 10-Minute Trading Room is exactly what you've been looking for. Head to 10-Minute Trading Room right now to learn more and trade alongside us inside the 10-Minute Trading Room. Be sure to like, subscribe, and watch all of our past episodes. All right, welcome back to today's How to Trade Stocks and Options podcast. I am super stoked because we have market wizard Jason Shapiro on with us. Jason was featured in Jack Schwager's Unknown Market Wizards, and you are actually the fifth market wizard that I've had the opportunity to meet with and learn from. So, Jason, I am super stoked to be able to have you on the line here. And of course, I've got a million questions. Tell me how your day's going.
I had a good day, thank you.
Yeah, with the Fed move, right?
Yes.
Yeah. So, tell me real quick, how did you get into trading? How did all that get started?
I first started trading. I had my first real job. I worked in Hong Kong for HSBC. I was a banker, which was not very exciting. And one of my friends who played on my softball team was a Hang Seng Index futures broker. And he got me into trading the Hang Seng Index futures as a way to break up my boredom during the day. And it just kind of went from there.
Gotcha. So you've always been a futures trader then?
I have always traded futures. The first thing I ever traded was a futures contract, yeah. Without even knowing what the hell it meant, but yeah.
What do you think about the futures market just in general, with the way that it's evolved so much over the years? With ticks and spreads and the liquidity and everything has changed. What's your background, or what are your opinions on the changes you've seen across the years?
I don't know. I mean, has it really changed? Market goes up, market goes down. You buy, you sell. There's more liquidity, so it's great. You can move more money in there. In most of the things, anyway, not all of them. And they've created smaller contracts, so that's good. So you can size a lot better,
Mm-hmm.
Even though I'm trading quite a bit of money, I still use a lot of the smaller contracts.
Like the E-minis?
The E-minis and even like with silver, I use like the micros and stuff like that.
Really?
Yeah, just because I have, a few different accounts and they're sized differently, whatever X $1 million here and X million. So I have to kind of make them as even as possible.
That makes sense.
I use that stuff. So I think they've done a good job personally.
So let me try and break it down real quick. So you started trading with the Hang Seng, did I say that right? Hang Seng futures?
Yes.
How did that evolve?
What do you mean by how did I start?
How did that evolve to being the fact that you were managing hundreds of millions of dollars and one of the market wizards? I'm sure that was quite a ride.
Very, very long ride. Yeah. Very long ride. But really what it came down to was the first day I put on a trade. I didn't really know what I was doing, and I went out for lunch that day and there was a bookstore across the street and I figured I'd buy a book. I'd always been a big reader. So I figured I'd buy a book and try to figure out what I was doing. And the first book that was there that I just happened to get was the first Market Wizards book. And I read that night. I was done before I went to sleep that night. And I was like, yeah, this is what I want to do. Not knowing, unfortunately, what that meant. What I should have done is buy a How to Become a Lawyer book and just but as it turned out, I bought a Market Wizards book and it sucked me in. And that was really how the whole journey kind of started and where I wanted to get to.
When you were reading that Market Wizards book, did you ever imagine that you would be featured in one? I mean, to me, the Market Wizards are like the all-stars, right? The retired jerseys that hang across the stadium.
Yeah. I mean, I guess that's sort of what you think, right? When you're a stupid young kid, one day I want to be a market wizard, I mean, ironically, but when he did call me and he wanted to do it with me and I went and I met with him and I spoke with him and I kind of was anti being in the book at that point. This is sort of how the cycle of life works, right? By the time you get there, you don't want to do it anymore,
Yeah.
But
what was your hesitation about being in the book?
I mean, what was the point at that point? You know what I mean? I wasn't looking to prove anything to anyone. I also am a little bit superstitious, and I feel like you start putting yourself in print as a market wizard, and you're setting yourself up, to fail. So I've known a lot of people that have been featured in books, and that was the end of them.
Mm-hmm.
And I don't want it to be the end of me. It's much more important for me to make money for my clients in the markets than it is for me to be in some book and show my mom, hey, look, I was in a book. So I was a little bit hesitant, but in the end, I did it. My friends were like, just do it. We used to quote market wizards, 10 times a day when I was a kid. So,
I believe it. I mean, I have quotes on my wall over there from Steve Cohen, Larry Hite, and Minervini and all them. And so, I mean, it's incredible that you've been able to do that. So, Jack, of course I went back and listened to your interview with him on Audible today. He described your approach to the market as unique and thought-provoking. What's your opinion on that? Why would you consider your approach to the market unique and thought-provoking?
I think that I look at the markets differently than certainly most of the things that you hear or read or whatever. I have a belief system about how the market works. That is not really what I find most people believe is how the market works. So I guess that makes it maybe thought-provoking.
How does it work?
I think that the market is a discounting mechanism, and therefore the discounting mechanism is positioning. I saw a guy on TV the other day say, and he's bearish the stock market, and he said something like, I understand that, people were sort of short here, but positioning in psychology is not everything, and that's where I would disagree. I think positioning and sentiment is everything. I think that's all there is, right?
Yeah.
In particular, when it comes to trying to make money in the market, which is what we're trying to do, right?
Yeah.
It's not that fundamentals mean nothing. It's that to get an edge on fundamentals, to me, is impossible, right? You've got 40,000, CFAs out there and MBAs, and they're all going through balance sheets, and they're all forecasting the economy, and they're all doing. How are you getting an edge there? I just don't know. I don't see how it's possible. So to me, positioning and sentiment is everything. Look at today. The Nasdaq's up 300 points.
Mm-hmm.
Everybody came in today. Oh, well, if the Fed is hawkish, it's going down, and if the Fed is not hawkish, it's going up. Well, the Fed was as hawkish as they could be, and the market went straight up. Why is that? It certainly wasn't fundamentals.
Right.
It was positioning. People are, as I've been sort of putting out on my newsletter, and I've been putting out on Twitter the last few weeks, people are massively short and bearish. That's all it was. Period. The end. You can't tell me something that he said today or something that the Fed did today that was going to cause the Nasdaq to go up 300 points. There's nothing in there fundamentally. I don't care what you say. It was all positioning. They were all short, and they heard the news, and they got even more short, and then it ripped their faces off. That's it.
Right. So when you talk about that positioning, sentiment, and discount mechanism, what do you mean by discount mechanism?
So the market is a discounting mechanism, right? We know that. We learned that in Finance 101, right?
Right, but what does it mean to you to be a discounting mechanism?
So it's discounting all the known information is in the current price.
Mm-hmm.
So there's no edge unless you have some kind of information that nobody knows, which I've said before is called inside information, and you go to jail for that. So you're not going to win
unless you're in Congress. Let's be real here.
Okay, unless you're in Congress, right? So there you go. Unless you're in Congress, there's no way to have that kind of information that's better than what's being discounted in. So how are you going to, trade that way if you don't have that? And to me, it's not the price that discounts something in. A lot of people like to be contrarian. Okay, here, this thing has gone from 100 to 300. I'm going to be contrarian. I'm going to short it. That to me is not contrarian, right? Contrarian to me is everybody is long this thing, so I'm going to short it, right? That's positioning to me. The positioning has discounted in all the good news, not the price. I had people telling me, I had some pretty famous fights on LinkedIn a few years ago with a guy who was saying that Amazon was a huge short, right? And this was when Amazon was on its way up, and everybody was saying that Amazon was a huge short. Amazon was a huge short. I'm like, I don't know the first thing about Amazon, what they do. I mean, obviously I buy stuff on Amazon, but what money they make, what their valuation is, I have no idea. All I know is if everybody's saying it's a huge short, it ain't a huge short yet. Okay. And I think the thing doubled from there, right? Because it wasn't the fact that it went up a lot. It was the fact that people still weren't super long yet, right? They were fading it. And so they were going to get ripped, right? And it's the same thing. You hear that now from people, right? Oh, the market is certainly not discounting in a recession here. Well, what makes you say that? Oh, well, because the S&P is only, X% off its all-time highs. That can't be discounting a recession. That's a price thing. And I think that's wrong. I think that people are discounting recession because people are massively short. Okay. So that's a participation thing. And that's what moves markets, or at the very least, that's what gives you good risk reward in putting on a trade to make money.
Sure. So help me break this down. So back in my early career of trading, I considered myself, this is some of the mentors that I learned from, a contrarian trader. But their style of contrarian trading was, if price had gone up to 100, you basically sell calls against it until your face bleeds. And that was like the worst possible case for me. It seemed like every time I did that, it always ran me over.
Exactly.
And so when I talked to Minervini about this specifically, and I was like, Mark, you call yourself a contrarian, but yet when I am a contrarian to price, I get ran over, just like I mentioned to you. And he's like, yeah, that's not exactly what I mean by that. What I mean, and this is Mark's words, what I mean is if it's gone to 100, everybody thinks it has to go down at that point. But in my opinion, it is only getting started, and it could continue on forever. So break down to me, if you don't mind, what does contrarian mean to you? Because it seems like there's a disconnect between price and positioning in this case.
Contrarian to me means positioning, not price. I don't care about price. Now, is there a correlation between something going straight up and people getting very long? Sometimes there is, Let me put it this way. If there were two assets and you looked at the charts and the charts were exactly the same, they were both 45-degree angle up, right? And one of them, everybody you knew was long. And the other one, nobody you knew was long. Which one do you think has a better chance of extending upwards, right? And I will argue all day it's the one that nobody you know is long versus the one that everybody you know is long. If everybody's already long, let's take the most extreme example, okay? Let's say some market, every person in the world had every dollar they had in that. Then how could it possibly go up? I don't care.
There's no more room. There's no more buyers.
I don't care what the news is. I don't care if you get the most bullish news in the history of the world. If there's no more money to go into it, it cannot go up, right? Now, clearly that example is impossible, but on a relative basis, that's what I look for. And if you look at market tops and market bottoms, I mean, clearly at the top, the market always looks best fundamentally by definition, because why would everybody be long? Because it looks best fundamentally and the trend is up and all the other reasons, right? And same thing at the bottom, right? Everybody's out and everybody's short because the fundamentals are so bad and the trend is so bad and the action is so bad. That's what a bottom looks like. The market doesn't go up on good news forever, and then all of a sudden you get some bad news, and then it starts going down and there's bad news, and then you get some good news, then it starts going. That's not how markets turn, Midway through that, you start getting that, right? Like now, you watch. Now we'll start getting some good news for the stock market, right? But we haven't had not one piece of good news in the stock market since the bottoms. Not one piece of good news. Yeah. Microsoft earnings, whatever earnings, all the earnings have been horrible. There hasn't been a single piece of good news yet. Does that mean that the Nasdaq isn't up 15% in 5 weeks? So you tell me. Well, what do you want to be? Do you want to make money, or do you want to make arguments about the fundamentals of the market?
So let me ask you this: how do you quantify? Because your analogy of if all the buyers are in this one stock, clearly it can't go any higher because everybody's already bought it. That I get that completely. How do you quantify that?
So I look at a few data sets. I like to look at the commitments of traders data, which shows positioning. I like to look at things like all what I would call participation data. Put call ratio, that's participation data, right? So that's kind of what I do quantitatively. And then qualitatively, I spend a lot of time that people think they make fun of me. My friends make fun of me. but I can see it from right here. I watch the TV and I listen to the commentators. I watch the aftermarket shows, right? And everyone's like, oh, those guys are bozos. Why do you watch that? And I'm like, that's exactly why I watch it. I watch it because they are bozos. You know what I mean? So I'm looking for mass consensus, and which also shows up in this other data. That's what I'm looking for. That's what I'm looking to fade.
So would you say that your style of trading is more discretionary versus rules based?
It's 100% rules based, but I do use some discretion. But there's definitely a rule. Everybody has to be long for me to look to be short.
Yeah.
Okay? And the market then has to confirm before I get short. I'm not just going to short it because I'll get run over. Being contrarian, you have to be very cognizant of getting run over, right? So the market has to confirm before I do anything. And those are the rules. Everyone's got to be long. The market has to confirm, and then I go with it. And then I have a stop that doesn't get changed and all that, and an exit strategy that doesn't get changed. So those are all rules based. I wouldn't call it a system, but I call it a process.
Yeah, for sure. Speaking of your exit strategy, what does an ideal exit look like to you? Do you pyramid into trades and then take it all off at once, or do you peel it off as you go?
Nope. I get in once. And I size it once versus my stop. I'm risking a fixed amount per trade from my entry to my stop, and then I just sit and I either get stopped and I lose that fixed amount, which happens a lot, or I sit and I ride it until what I was trying to do goes away. So what was I trying to do? I was trying to get long something that everybody was short. But when everybody's no longer short, then I get out. There's no edge to me there,
What percent of risk are you taking on these trades?
I risk 70 basis points a trade.
Oh, wow. 70 basis points.
Which
that's really tight.
Well, it puts my vol at about a 7 or 8 annual vol, which is where I want to be. Remember, I'm not managing my own money. I'm managing institutional money. I'm not looking to put up 100% a year like a lot of people are, right? 15% a year. Don't draw down 5%. That's all I'm really looking to do.
Gotcha. So what represents a good setup to you when you're looking at this? You've got all of the market sentiment indicators pointing bullishly. Let's just use that for example.
Mm-hmm.
You've got all the market sentiment indicators. Well, I guess you could say everybody has decided that it's bearish, so now it's time to go bullish. Mm-hmm. What represents a good setup technically to you?
What do you mean by technically?
Do you use any sort of moving averages or nothing like that?
The only thing that I use is on my entry, which 95% of the time is a reversal candle. But it has to be reversal candle. So let's talk about a buy. Okay.
Yeah, please.
Let's talk about the low on the stock market, on the S&Ps. Okay.
Sure.
Which were,
I'll pull it up here while you're talking, and we'll be able to have it live as we go.
Yeah. This was on October 13th? October 13th, right? Was the low.
Oh, I had to go back a little bit. Sorry.
Yep. See that green arrow?
Yeah, the big green candle right there. Yep.
So what happened on that day?
So it opened down and then tremendously came back up with what
was the news on that day? That was CPI day. Okay. And at the time, CPI was all anybody cared about, right? And that CPI came out that day, not only the largest CPI of the year, and CPI had been coming out too high all year, right? That was the largest CPI of the year, and it was much higher than anyone was expecting, which is more important, right? It was higher than expected, right? That's the main thing. Very bearish. There was nothing not bearish about that CPI, right?
Right.
Which was the main number that everybody was focusing on. So it gave bears every reason in the world to short, right? Somebody sold that low right after CPI, right? Now, in my eyes, knowing how hard trading is, the market had been going down since what? November,
right?
Okay. So this guy waited this entire time for that CPI number to come out to get short. I'm sorry, that's not how markets work, man. They're not that easy, right? That, like I was saying before, that's how they bottom, right? And that's exactly how it did bottom. So it closed up that day. So I look at that and I say, okay, everybody's too bearish, everybody's too short, right? And by the way, I had felt that way from way before this. I just never got the market confirmation, which I have to say is the most important thing, right?
Which was this big reversal candle?
Big reversal candle on a hugely negative day, on a hugely negative fundamental print, right? That's the important thing. I call it news failure.
Mm-hmm.
So it should have been down because of that CPI number, right? And it wasn't. It closed up. And why is that? In my view, it's because everyone's already short, right? So I buy that close right there. And my stop is that low. So now I have a size, right? Because I know what my stop is. And it's not just some random stop. It's a stop that makes sense. This person that sold that post CPI print should never, ever make money. You should never get paid doing that. If trading were that easy, then we'd all be rich, right? You should never get paid doing that. So if you do get paid, well, then I'm wrong. And the market's obviously much weaker than I thought. So there's my stop. There's my entry. I size it, entry to stop, and then I just sit on it.
Do you enter at the close of the day?
I'm supposed to enter at the close of the day. Sometimes I will start to enter a little bit before. If ultimately I'm going to buy 100 in S&Ps, if I'm really feeling it, then I might buy 10 of them, when the print first happens, just in case. And as it starts to go up during the day, I might add to it. But if I don't, then yes, I'll just buy the close. But sometimes, I'll get in a little bit earlier. And sometimes that hurts me. You know what I mean? I'll try to get in early, and then we didn't get this failure. We didn't get the reversal day, and I have to piss out at the end of the day, right? But hopefully I didn't do too many by that point, right? So in theory, the close of the day.
So let's use this as an example. Let's say you're getting in at the close of the day, and it's not hit your exit point. Where do you take profits along this way?
So now I'm monitoring this data. I'm monitoring the long short. I'm monitoring the bull bear. I'm monitoring, all this kind of stuff. And when that goes neutral, because I take this data and I turn it into an oscillator, right? So when my oscillator goes neutral, which means that it doesn't mean people are super long now. It just means people are not long or short. So there's no edge for me for what I do, right? So when my oscillator goes neutral, I get out.
And then are you waiting for another bullish reversal candle to get back in? Like maybe
well, now I'm waiting for my oscillator to get, whacked out one way or the other again first, right? Either people are going to get too long or people are going to get too short. That's first. Once that happens, then I'm waiting for the news failure reversal candle. Yeah.
So how long would you say you go between trades? Like, let's say, for example, you got in here on the 13th, and I'm going to, do you approximately know when you got out, or if you've gotten out?
I'm still long, brother.
Oh, you're still long from there?
Yes.
Wow, look at that. So that's from 350 to 410. And I bet people are calling you crazy the entire time.
Drawdown in the meantime, you know what I mean?
Yeah.
It was a big move down in December. It hurts, but
Well, I mean, looking at this looks like a huge breakout here. Does that mean anything to you? Do you look at breakouts?
I mean, I look at charts, but I don't trade breakouts. I hope everybody thinks it's a huge breakout. I hope they all go chase it now because, I'd love to have a nice February.
So when you say you'd love for people to go chase it now, does that mean that you would like a bullish entry on that? Or do you feel like that would be the exhaustion point?
I think that would, if they chase it, if they start getting out of their shorts, and if they start, being forced out of their shorts, then my stuff is going to show up as, okay, they're not short anymore. Okay, now I got to get out.
Okay, and then you're waiting for that bearish reversal candle on news to get
back
in.
I'm waiting first for the oscillator to get to where they're super long now, which could take, I don't know how long, I mean, I'll be out of the market until that happens, but I trade 35 different markets. So there's no difference to me between, I know everybody loves trading S&Ps. There's no difference between lumber and S&Ps and orange juice and the euro and soybeans. They're all exactly the same to me.
So what is in your oscillator? Is that like your own proprietary oscillator? Is that something that is available on the internet?
Data, put call ratios, stuff, all participation data like that.
Okay. Gotcha. So how long did it take for you to develop this style of trading? When you look at the markets, right, and you're taking this contrarian approach, I can imagine that this wasn't something that just popped up overnight.
The contrarian idea always struck home with me. But I think like most people that try to be contrarian when they start, exactly what you were talking about earlier, I was thinking, oh, this thing's gone up a lot, I'm going to short it. And it didn't take very long to learn that was not the way to do it.
Yeah, I learned that.
Yeah.
I paid a lot to learn that.
That's right. I paid a lot too, man. You're talking about, I went broke more than once, right? So I quickly learned that's not the way to do it. So I sort of started looking at it, and I had some people that I worked with. I had this crazy guy that I worked with for a while who would just fade everybody, and he was crazy, but you know what? He made money all the time, right? This was my very first job where I worked in like a retail brokerage thing in Hong Kong. And if you just think about it, if you just back up and think about it for a second, this guy was an older guy and had been in the markets for a very long time. And he was a very smart guy. But here's a bunch of, kids in their 20s, trying to trade the market and whip around. What are the chances that they're going to make money over time? It approaches zero, right? So if you're smart, you just sit back and you just fade everything that these guys do, right? And you make money. And if you can fade them when they're all acting the same way at the same time, it increases the odds. So that struck home with me. So I started.
So you're observing them all in this.
I was one of those guys. I was one of them. I'm a 23-year-old kid that just got in the market. Oh, I'm going to make money. I'm going to be a millionaire. You know what I mean? Like, what are the chances? It approaches zero very quickly, right?
Yeah.
So, yeah, I observed what he was doing, and it made perfect sense to me. And so I said, okay, how do we start measuring that, right? How do we start measuring that? And I really didn't find the commitments of traders until 2000. I was shorting the NASDAQ for the second half of 1999. All right. Trying to be contrarian. I don't know if you were around then.
When it's going straight up at that point, right?
Yeah. The second half of 99, no matter where you went, no matter who you talked to, no matter where you were, all anybody was talking about was how much money they were making buying NASDAQ stocks.
Right.
So there's me, Mr. Contrarian Genius, and I'm shorting it. And you know what? The NASDAQ went up 50% in the second half of 1999.
And you had positions on as it's going.
I was trying to short it the whole time. I was good enough at that point that I knew I had to stop out. You know what I mean? But I wasn't making no money. I can tell you that, right? So, and then finally it did top, in early 2000. And everybody that made all that money lost it all. Okay. I always say, like, if you were still long those stocks in the beginning of 2000, then clearly you weren't looking at anything like valuation, because those things were overvalued a year.
Well, that's kind of what happened for like all of COVID, right? 100%. It seemed like everything was going straight up, and there was all the meme stocks and all the people who thought they were trading gurus.
100%.
And then they've lost it all in 2022.
Correct. So I've seen this cycle more than once, right? So that's where you learn the patience, of, it's like, just because these guys you think are going to lose money, that doesn't mean that they can't make money for a while. You know that they're going to lose money over time. But the more they make now, the more they're going to lose later. So let them make their money for a while. Be patient. Wait for the market to confirm. And if you look at the commitments to traders data, it really didn't show that speculators were massively long the NASDAQ until January of 2000. And when I saw that, I was like, okay, I got to start paying attention to this data, because that would have kept me from getting short that whole time. And did I get short in 2002? Yes. But, I was also short in, August, September, October, November, December, right? Mm-hmm. So that would have kept me from doing that, right? And the famous story is that, Druckenmiller, who's to me one of my idols, he was shorting all those NASDAQ names at the same time that I was. And he got run over. And then he finally gave in and actually got super long. And you know what? Right when he did that is right when the commitment to traders showed everybody had gotten long. So you needed these big guys to capitulate. And once they did, it was over, right? And it's very similar to what happened, post-COVID to me. So there you have it. That's how I got into the commitment to traders data. It's all about, and what I find, commitment to traders data is not some kind of magic wand, Has it picked a lot of turns for me? Market turns? Yes. Have I gotten stopped out of a lot of trades and it's been totally wrong? Yes. But I find more than anything else, it keeps me out of trouble. If I can't short something until it shows that people are super long, I might miss a short. So what? I miss trades all the time. I have 35 markets, so I trade all of them move every day. Yeah. I'm in 3 of them. You know what I mean? So there's 32 that I'm missing. I miss trades all the time. Bummer, right? I don't care if I miss trades. I just want to have the best risk reward trades on over time that I can have. And that's what that helps me do.
So when you trade all 35 markets, do you trade them all the same? Or is there a way to get that commitment of traders data for each of the 35 markets?
Yes.
Oh, okay. Gotcha. So
all U.S. futures contracts have a commitment of traders data.
Oh, I did not know that. I'll have to go Google that up. What is your favorite market to trade?
I have no.
Sure you do. You got to have one. You're like, oh, I love the Nasdaqs. It's so much more interesting.
I don't. Not only don't I not have a favorite trade, I hate them all.
That's a better answer right there. What do you hate about them all?
You know how this is, man. There's no sleep. There's no, there's a lot of stress. There's no sleep. There's, you have risk on all the time, and I take this very seriously. I manage people's money, and I take it very seriously, and I don't like to fail. So, there's a lot of stress there, even if you believe that what you're doing works over time, and even if what I do has been working over time, and I'm giving my clients exactly what I tell them I'm going to give them, which I am doing, okay, that's all wonderful. My wife can still tell you within 5 minutes of walking in the door whether I had an up or down day, just by the look on my face. So, if I truly hated them, then I would just stop doing it. I mean, obviously, I love doing what I'm doing, but it's like I say, I should have been a lawyer. That's what I tell everybody that comes to me. Hey, man, I want to trade full time. I go, do yourself a favor, man. Go to law school. My brother's a lawyer. $300 an hour, every hour that he spends. Right? I spend 18 hours a day in front of these things. I'm getting paid 0 and 30 from my clients. So, you know what I mean? I could spend 18 hours a day all year and get paid 0 at the end of the year. So,
well, I was going to ask you when you are you trading all 24 hours and all 35 markets? That seems impossible.
No, to me, the 35 markets are it's like you're counting cards, right? In blackjack, there's 35 tables out there. And I'm waiting for the card count to get too high on one of the tables, and then I go to that table, and that's where I make a trade. You have maybe 3 to 5 trades on at any one time, and I'm not day trading them, and I'm not intraday trading them, and I'm not doing all that. But for whatever sick reason, over the 30 years I've been doing this, I've developed this habit of sitting here and watching it anyway. I feel like I'm picking something up just by watching it. And really what I'm picking up is, because where I do use some discretion is once I have a portfolio of trades on, if I have 5, 6 trades on, I'm now looking at the portfolio risk. And I know I can run, value at risk or whatever, but I think that's all garbage. I think I can do a better job of watching the correlations myself. So I'm watching really what I'm paying attention to most of the day is the correlations across markets, right? To see where that is, right? Mm-hmm. And what is moving those markets so that I can understand what a news failure event is. In the stock market, it's pretty obvious that it was a CPI thing, but what's a news failure event in, soybean meal right now, right? What's a news failure event in orange juice? So I'm really watching and listening and paying attention to those so that I know what the story behind what is moving these markets right now. So when that story fails, I can go the other way.
And that's an interesting point I hadn't considered is what is a news failure event? Could you give me an example of a news failure event for soybeans?
Sure. I mean, the inventory reports come out every month. The next one comes out next Wednesday, I believe. So you get some kind of real bullish inventory number, right? Planting number or whatever it is. And again, I can't even tell you the details of it. I just don't know enough about it. I'm not going to pretend like I do. I'm never going to know as much as a farmer, right? I'm not a fundamental soybean trader. It becomes pretty obvious because the WASDE report comes out on a Wednesday, and at 12 o'clock and at 12:01, soybeans gap up 5%. You can be pretty assured it was bullish news, right?
Mm-hmm. Yeah.
So I'm watching for that type of stuff.
How do you balance all of this? Because it sounds like I say it's exhausting. It sounds like with so many opportunities out there. How do you balance it?
I don't think I do a very good job. I can sit here and tell you that I do this and I do that, and I play guitar, and I took up guitar a few years ago as a way to get away and take. But you know what? I don't practice nearly as much as I want to, or nearly as much as I plan to, because I sit here and I do this shit all day. Mm-hmm. When I had kids, I still have kids, but they're grown up now. But when they were little children, it was a little easier because I had to do stuff with them all the time. Hey, we got to go to the Little League game. We got to go to the soccer game. We got to go to dance. We got to go here, there, right? So I could get away a lot more. Now my kids are all grown up. I live here alone with my wife who works all day. Comes home at 4:00, and then I usually take a nap from 4 to 6, which then keeps me up until 1 or 2 o'clock since I'm all rested. So what am I going to do? Well, I mean, I work out of my house. I can see my TV right over there. If I want to watch the baseball game, I can turn it on right there. And what am I going to do? I can sit on the couch, or I can sit right here and just pay attention to the markets. You know what I mean? And so that's what I do, just out of habit. Now, having said that, we started this crowded market report, and in there we got a Discord page. So we now have a whole bunch of people on our Discord page, and I have friends that I can talk to, about markets, and sometimes we'll talk about sports and music and all this stuff. So that's helped too, right?
What do you think about these people who portray the trading lifestyle, the Lambo? There's one particular.
I think they're morons.
There's one particular person I've seen, and I had to block him, not because he's done anything wrong to me personally, but I couldn't see his feed anymore because it would be him flying in a helicopter to go from A to B to go trade at this place where he took a helicopter to. And then he'd have this screenshot of how much money he made that day. And then he'd take a McLaren back home. And I'm like, this is not real life. And coming from somebody like yourself, who's managed, pushing $1 billion at one point, it sounds like. What's your opinions on this?
I bought a new car 2 years ago. I bought this nice Toyota RAV4 Prime. The reason that I bought the RAV4 Prime was because it was in the middle of COVID when they had no cars. Mm-hmm. The only choice was the RAV4. I wanted to get a Toyota because I know those are good cars. They had one RAV4 that was like $20,000 and it had nothing, like roll down windows. And then the only other one they had was the RAV4 Prime, which has everything. I don't really like everything because everything breaks down, all those electronics, and I don't like to deal with that, but I did buy that. The reason I bought that was because my youngest kid was going to school and wanted a car, so I gave her my car, which was a 1989 Toyota 4Runner.
Oh, you're kidding.
Yeah. So that's how I feel about that.
Oh, my God.
When I was 24 years old and I first made a bunch of money in the market, I went and I bought a Porsche, right? Mm-hmm. In fact, I was in Hong Kong. I bought a Porsche from Jackie Chan's collection. Right?
Oh, wow.
Yeah. I didn't meet Jackie Chan, but he was driving that car at one point. I bought it. It was a Porsche 930 Turbo. And I thought I was obviously the coolest kid in the world. I'm 24 years old. Look at me. I drive a Porsche. Well, you know what? This 12 months later, I couldn't even afford to put gas in the freaking thing. Okay. I think that, and a lot of this has to do with some very deep life things and some Buddhist things and all this, but I think a simple life is the best life you can live, no matter what you do. Mm-hmm. I think as a trader, my whole financial world, and you got to remember, I have some money now, but I went through a very long time where I didn't have money. Okay. My whole financial world is based around not needing money, because the less money that you need, the better you can trade, right? The more you need it, the more you force trading. And as soon as you force trading, you start losing, right? My whole world is centered, my whole financial planning world is centered around not needing to have money so that I can just focus on what's a good trade, not how am I going to make money, right? I have to put this trade, I can avoid FOMO, I can avoid all that stuff because I don't care, right? I don't have a mortgage, right? And I don't live in a $10 million house, you know what I mean? I live in a normal house, a very normal house. And I drive very normal cars. I don't have any car payments. I don't have any mortgage on my house. I don't have anything. I put my kids' college education school away a long time ago. And my company too. I had a CTA where I had a bunch of people working for me and we had a huge nut and it was horrible. Okay. I'm a one-man operation now. I have people call me up. Hey, what do you think your capacity is? I say, my capacity is how much you guys will allow me to manage as long as I'm a one-man operation, because I'm not hiring anybody. Okay. I don't want the nut. I don't want any of that. I work out of my house. I run my business on about $15,000 a year. Okay.
Wow.
So to me, besides the non-trading aspect of it, which I think is the best life you can live, is a simple life anyway. For trading, it's even that much more important, right? You can't need money. Otherwise, you can't trade. it's really that simple. As stupid as that sounds, we trade to make money. Okay. But if you're forcing the money thing, your trading is going to go downhill. I guarantee it. You're going to chase trades. You're going to miss trades. And you're going to wish you didn't miss them. And then you're going to chase them right at the wrong time. We've all been through this, right? I don't chase trades because I don't need it. You know what I mean? I don't need it. I wait, and I can be. People are like, how can you be so disciplined through your process? You sit there all day. You're not telling me that there's different trades you want to put on. And I'm telling you no, okay? Because I have made a choice that I would rather make money. This is not about a thrill to me. This is not about a hobby to me. This is not about it's fun to me, okay? This is about I manage something, and I try to do it as professionally as possible. And one of the ways that I can do that is not worry about the money. Just worry about, is this the right trade? Is this the trade that fits my process that I believe works over time? Period. That's it.
I'm so glad you mentioned that, because one of my mentors ages ago told me to stop focusing on the money and focus on the process, and the money just comes automatically.
100%. Doesn't come, even then it doesn't come automatically. Okay.
Right.
But that's 100% what this is. It's all about process. And I think that everything in life is really about that. Have a process that works and stick to it. Because when you get off that process and it stops working, now you're mad. So now you got to go make up for it. Oh, I can't believe I got off my process and I got long cotton and that was a mistake and I lost money. Well, now I'm going to chase cotton forever, right? Mm-hmm. I got to go get my money back in cotton that I lost, that I shouldn't have lost. And you're just going to dig yourself in a hole 100 times over, right? Yeah. So I think that's what it is. People have a hard time understanding that, but I think that's the most important thing there. This is about process. It's not about money. Focus on the process. Take the trades that have the risk reward over time. And don't get mad when one doesn't work. 37% of my trades make money. Okay. That means
just 37%. So 2/3 don't make any money at all.
Yes. Yeah. They lose, not because they don't make money. They lose money.
Yeah.
I get stopped out. Right. So whatever. You know what I mean?
Well, no, it's great to hear like real life trading on this, because nobody talks about this. This is not what's put out there.
Is to make sure I get stopped out when that happens. Okay, mm-hmm. Not to wish that I didn't get stopped out. Not to say, oh, I'm not going to stop on this one because I'm sick of taking losses. Not to say, oh, I just took 4 losses in a row. I don't want to take a 5th one. No, my job is to make sure I get stopped out on that one so that I lose 70 basis points. Because then when I make on the other 37%, right, I make 400 basis points. Right. So if I can lose 70, make 400, lose 70, make 400, do the math, right? That's all this is. That's my job, is to stick. My job before was to come up with the process. Okay. But now my job is to do the process. That's it.
Is there a way that you feel that you could ever automate this with maybe a trading system of some kind?
I mean, I have automated. When I ran my CTA before, we ran it 100% automated.
Oh.
And I hated it because
that's not what I expected.
It was return degradation, you know what I mean? And I don't like that. It still made money, but I closed my firm down. I got divorced and closed my firm down, and I took like 2 years off. Mm-hmm. And we were doing that then because we had to raise money, right? Because I had a huge nut and I had all these people and they all wanted to make $1 million a year. So I had to get the assets under management up, you know what I mean? And people were putting us into their systematic funds. Yeah. So we had to run it systematically. Okay, great. But there was return degradation and I hated it. So when I came back, I didn't do any of that. I went to someone I knew. I said, then they just get, they're a prop shop, so they could care less as long as you make money. That's their attitude. Make money, otherwise leave. You're gone, right? They don't care what I do. So that's when I started to do sort of this mix of what was that system, along with some discretion, especially on the risk management side on top of it. And that was about, 5-6 years ago I started doing that. And since that time, my returns have been the best they've ever been. So again, it all comes, and I still have on TradeStation on my desk right here, my system. And I measure my returns versus the system returns. Because if the system returns are better than mine, well, then what am I wasting time using any discretion at all for, right?
Yeah.
I monitor that, you know what I mean? And if it wasn't the case, then I wouldn't do it, right? Like I say, this is all about getting the best risk-adjusted returns you can. So if something is not doing that, well, then you got to get rid of it, right?
Right.
But what it's showing me is that the discretion has been helping me improve my risk-adjusted returns by a lot. So.
I really appreciate you taking the time to go into that realm of trading, because so many people think that this is a glamorous lifestyle, right? Or if you're not driving a Lambo, you don't know what you're doing. And, I've been preaching that for ages, that doesn't matter. All that matters is following processes. Right?
One of these guys said on one of these, I was on some, we would still laugh about it. I was on somebody's like interview or whatever, and you can see behind me, you see that shade behind me?
Yeah.
So he was mad because when we were setting it up, that there was too much sunlight coming through. So I had to like lower it. So the shade has like a motor that lowers it.
Oh, okay. Yeah.
So I lowered it, and you can see like my little filing thing there, and it got caught up on it. So it was like half of it was down, half of it was up, whatever. And one of the guys on the video is like, "Why should we listen to this guy? It looks like he works at a motel. He lives in a Motel 6." So yeah, I mean, you want to follow the hot shots. You know what I mean? If you're young and stupid, then we know as we're older that the people that do that are morons. You know damn well it doesn't work once, ever. There's never that 23-year-old kid that takes the first whatever money he makes, a couple $100,000 he makes, buys his Lambo and shows his cash, and goes to a strip club.
Doesn't even have to be that. He could lease it, right, for $1,000 or $2,000.
There's a million freaking things you can do. That's the point, right? It's all damn well it's bullshit. I had a 930 Jackie Chan's 930 Turbo. Okay, it took me a year to blow out. Right, the more you do that, the more likely you are to blow out. The more you're full of shit. Yeah, as you get older, when it's young, when you're young, you're like, oh yeah. I mean, I think of the people that I thought were so cool and so successful when I was a kid. And I look at them now, and they're freaking losers, man. And they were doing all those things. Look, this is what we do when we're young. You have an ego, you're out in the world. You think getting a sports car is cool. You want to live in a big mansion and get this cool sports car and be going to strip clubs and throwing money around. And, and in time you'll learn that how stupid that is.
Yeah, for sure.
So,
oh man, Jason, this has been captivating. Let me ask you one quick question, and then I'll let you get back to watching the markets nonstop.
It's my nap time, actually.
Well, then I'll let you get back to your nap. If you could give one takeaway, one piece of advice to a trader, somebody who's looking to get started, what would you say to them? What's your piece of advice that you would give to somebody wanting to get into this field?
Process. I mean, there's a few pieces of advice, but for certainly one will be process. This is all about process. We like to say on my Discord page, we say it all the time. Getting the trade long or short right is maybe 10% of what matters. It's risk management, right? That's what this game is. Risk management, right?
Yeah.
Stick around. Make sure that you stick around long enough to get lucky. That's what you got to do, right? Which means it's risk management. You got to get your ego out of there. Oh, I called the market. It went up. It went down. Look how smart I am. That's not going to work over time. You're not going to consistently call the market over time. You're just not, okay? So this is all about risk management. It's not about being a hero and calling the market. Yes, get yourself, like I say, over 60% of my trades lose money, okay? But my risk management's good. That's all I am really is a risk manager. And I'm looking at, positioning and all that in order to get the risk reward and deal with the risk management. That's how I choose to look at. But I don't care what you look at. Flip a coin for all I care, right?
Yeah.
But it's all about risk management.
Absolutely.
That
reminds me. So when I worked with Larry Hite, he was telling me this story about how
I met Larry one time,
Yeah. When I worked with Larry.
What was his partner's name? Grzinski or remember him?
No, I don't remember his name.
Anyway,
I was just going to say, when I worked with Larry, he was telling me that back in the 60s, he ran this computer that's as big as my house, right? And they did an analysis on random entries. And he said that the random entries with a trailing stop beat the market every time because it was all about the risk and letting your profits run as long as they could.
That's it.
Larry's a good
guy. Is Larry still around?
When I talked to him, funny story, the first time we were supposed to meet, he didn't show, and I'm like, oh my God, I think he died.
He's super old.
Because he's super old, yeah.
He was never, to tell you the truth, I met him 20 years. He was never in great shape.
Yeah. He's still around. He's still kicking. Last time I talked to him, he was during COVID.
Larry Hite's a good guy, man.
Yeah, for sure. I learned a ton from him. And I feel like I've learned a ton from you, Jason. And, thank you so much for the opportunity to meet with you, to chat with you, and to share this with people. We're going to have this edited and go live in the next week or so. But as we're moving into 2023, I'm not going to ask you what your opinion is about the market because it doesn't matter. But what's your opinion as far as where someone could get started learning about you and learning about the markets?
I mean, if I'm going to do a self-promotion, we started this crowded market report about 18 months ago. After that book came out, I got a lot of people hitting me up on LinkedIn. Hey, can you teach me how to trade? Hey, can you mentor me? And as I think Larry Height would tell you, as you get older, I'm 55 now, right? You want to do that, right? It's almost a part of trading lore is that older traders help younger traders learn how to do this, right? So while I do want to do that, I was getting 10 people a day coming to me asking me that because of that book. And I was like, I can't help 200 people at the same time, And one of those people said to me, well, if you're really getting that many requests, why don't we start a web page where you would be able to centralize that? And I said, if you want to do that, that sounds great. And he did. I've never met this guy to this day. He's my partner 2 years later. Okay. I've never met him in person, which is a phenomenal story, quite frankly. Yeah. That's one of my favorite things about it. But we started this webpage where I've always written a newsletter on the weekends. I call it a newsletter, but I always wrote sort of a summation as part of my process on the weekends to sort of highlight what I'm looking at, what my stuff is saying, what I will be looking to do so that I would be ready to do it if certain things happen. That then, as I was writing, that got distributed when I worked at a hedge fund amongst all the people there, and they seemed to like it. When I ran my hedge fund, I had 3 clients who were hedge fund managers themselves. I was running their personal money. I would send it to them. They seemed to like it. So I said, why don't you go start this webpage and we will distribute this newsletter. And that was really all it was supposed to be, But he got a Discord page on there, which I didn't even know what that was, quite frankly, at the time. But we got this Discord page. And then as part of trying to promote this site, I started doing videos on YouTube under the same name. So you can go on YouTube. We do a video every week. I try to focus, once in a while I talk markets there, but I really try to focus not on here's what I think the market's going to do, right? I try to focus on here's what you have to do to be a successful trader. And even in my newsletter, do I give the trades that I'm doing? Yes, I do. But I try to tell people that's not necessarily what you want to do, right? What you want to do is learn how to trade yourself. I want to, I'm hoping to help people, as they say, learn how to fish. I don't want to give them a fish. I want to help them learn how to fish because, first of all, what happens when I'm not around? Well, what if all my trades are phenomenal and you're making a ton of money, which is not the case. But if it were, okay, then what are you going to do when I die, right? Or when I retire or whatever? Yeah. What are you going to do then, right? B. A. And B is it's not about that because if you don't, you have to trade you, as people say, right? You have to trade yourself, right? You can't trade me, right? I can trade me because this is how I think and this is how I am, and therefore I can trade me. I trade all the time that guys take where, and on my Discord, they'll be like, oh man, I got short that with you, but I got out, a week ago and the thing's 20% lower, right? Mm-hmm. And they don't get that I have to sit on it and make that 20% more because of all the losing trades I have to make up.
Yes.
So not trading you, it's not going to work. Just trading my ideas, it might help. And I think looking at the data that we give, because we give the COT data and I give an analysis of all that, right? But I also talk a lot about, the psychology behind trading and all this. And I've been doing this, a long time. And I have been a loser myself, right? And I have sat with many traders who have most of who have lost money. So I can start to see the psychology behind that, right? So I'm sort of trying to pass that along much more than, hey, buy S&Ps here. And like I say, I do say that, right? I do say I'm buying S&Ps here or I'm selling lumber here or whatever I'm doing. But I'm really trying to get the point across of this is how you have to start to think if you want to succeed at this.
Yeah.
So that's really the best place to get. Then we kept it super cheap. You know what I mean? I don't make money off of this thing. My partner does because he put the whole thing together and he has a full-time job and he has to take care of the whole webpage and all that shit. I don't make money off of it. My money goes right to a charity. So that's not what I'm trying to promote, but I am promoting it because and you can go and look on that page and look at the testimonials. We don't tell people to write testimonials. We didn't write these up ourselves. We didn't take the bad ones out and leave the good ones in. I really feel like we are, not everybody, because some people don't change, but there have been a lot of people in there that I really feel like we are helping to learn how to do this correctly.
That is awesome. Jason, let me say one more time, thank you so much for allowing me and our traders to learn more about you, more about your company, more about your history, and more about the way that you trade. I am incredibly grateful for your time, and I know that you got to get back to your nap. So
no, it's fun. Great conversation.
I will let you go, sir, and thank you again so much. Have a fantastic afternoon.
Thank you. Take it easy.
Talk later. Hey, don't forget, head to 10minutetradingroom.com to learn how to effortlessly take the guesswork out of trading in only 10 minutes a day and start trading right beside us in the 10-Minute Trading Room.